I am very angry and upset. You would always join us for the first take on the budget day in our studio. And you're joining us today to react on the insurance sector. Not done.
Someone's got to stay back and do work, right?
Saturday. Who's working excepting us?
In solidarity.
Okay. When the insurance FDI was less than 50%, market said increase it and stocks will go up. It went to 74%, everyone said okay, thank you. Today it's gone to 100%, markets are saying it will increase competition and stocks have gone down. Is it true that 100% FDI means competition will increase?
It's difficult for me to say, but let me just help deconstruct when FDI went up to 74%. Since then, only 3 companies in the life insurance space have taken it up to 74%. So this is just above 10% of the companies. So woefully small. Those 3 companies, I would not say that has significantly changed in terms of market share either. So really for a country of our size, we probably need 2x or 3x number of life insurance and overall all sorts of insurance companies to be able to serve. So I don't think that it automatically means, number one, that more capital is going to come. Number two, even if capital does come in, that it's going to change the dynamics very significantly. Second point is that the rough math, at least in the life insurance sector, what we've seen so far, is that one needs almost 2,000 to 3,000 crores of capital and fairly patient investor appetite. And by that, I mean over a decade to even see break even. And this is if one has a fair bit of credible distribution. If one doesn't have, then the wait can be even longer or even into perpetuity almost. So these are the dynamics, at least in terms of life insurance. So I think time will tell, and it's great if people feel enthused. But I think the most important aspect for our sector is regulatory stability. And for better or worse, we have seen time and again many things that have significantly impacted the business model of our sector. We had the change in taxes, first unit-linked taxes in 2021, followed by taxes in other than unit-linked, the 5 lakh limit, followed by many changes in terms of more customer-friendly, but significant changes to the sector. So I think that kind of stability is really what from an outside-in investors are looking for before they can make up their mind that can they put 3,000 crores of capital into the company and the sector.
Vibha, to understand this whole clarification in terms of an impact analysis for ULIP, now that clarity has come in, will it be easier for a manufacturer now to come up with perhaps a clarity when they're selling the units or they're selling the scheme?
No, the clarification is in terms of policies that have already been sold before the year 2021. So it really changes nothing in terms of going forward. So unit link will continue the way we have been selling it since the last changes in the budget in 2021. And to summarize those changes, if the annual premium is less than 2.5 lakhs, then that is 1010D, section 1010D compliant. Of course, there are some other nuances in terms of how much of sum assured, but that section 1010D compliant, and so they are tax free. Those that are above that limit are taxed as per capital gains tax. So nothing really changes. So it is more clarificatory in nature as the language that has been released today in the memorandum. It is merely clarificatory in nature. However, we welcome it because not only is it clarificatory, but policies that were sold before 2021 that did not have a tax-free status now will be better off quite meaningfully if one is in the highest marginal tax rate. To explain, those that bought policies before 2021, February 2021, and the policies did not enjoy tax-free status would have paid tax, say at 30%. Now, going forward, they would pay at 12.5%, and so would be meaningfully better off. So it is a slight positive, but no change really in terms of going forward.
One final question, which is that if I look at insurance, the big picture is penetration levels are low. India needs to be insured more. COVID has been an eye-opener both in terms of health and life. But if I look at the government support, very little has come. I mean, it is only about disruption, it is only about changes which in a sense have made insurance as a product perhaps less more attractive. And that's the irony. I mean, insurance, India needs more insurance. And there is nothing coming from the government which would say that, okay, hum khade hain aapke liye.
No, I think that what is pro-customer is anyway needed to be done. So things like right selling, not forced selling, surrender charges, and so on. So I think those are anyway need to be done. But I think doing them all as a policy to say this is an overall of the sector, let us do it and then let the sector grow. Because some data points here, Nikunj, is that during COVID, the sector paid 65,000 crores of COVID claim without a murmur. And I'm very proud of the sector that we also, did not have solvency issues. We did not delay unnecessarily, just trying to be difficult because these are extremely large number. We often paid proactively even when we did not have all the requisite details like even a basic death certificate. And yet we rose to the occasion. Even if you were to look at in terms of maturity policies, in terms of overall, in terms of innovation, moving towards increasingly straight through underwriting and straight through processing and so on, a number of group policies that are covered. So I think while there might be a little bit that needs tightening, but I think as a service, we are also talked about, comparison to say if you want to buy insurance, unbundle, but nothing can be further from the truth, and I'm taking this platform to just deconstruct the myth to say that if you were to look at a unit-linked policy, while it is much maligned, a lot of people like the solutioning aspect to it. And when you compare it with some of the other investment vehicles, one doesn't take into account that what happens if a person passes away. And one could hypothetically say that you could buy a term and so on, but usually people don't do that. So at least they have a 10 times cover rather than having zero. If you have the wherewithal to deconstruct, unbundle, please do it. We have those products too and in large measures. So I think I agree with you that the time is right for, as a nation, for us to realize the core of what an insurance as a sector does and how important it is to propel us to be the number 3 in terms of overall global rankings. Can't happen without insurance being a large support the way we did stand, as a support for the nation at the time of COVID distress.